You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO. This Week in Futures Options, a program where we break down all the action on the other side of the fence, the futures options side of the fence. Maybe some grain, some rates, some FX, some energy, some metals, some equities. You never know what's going to make it onto the show. That's why you got to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fun network upon which you are enjoying this program. If you just listen to the TWIFO, make sure you go ahead and subscribe to the full network. You're missing out on a whole bunch of other shows if you're just listening to this one. And also, wherever you're listening to this, if you like what you hear, make sure you leave a review on your platform of choice. Could be iTunes, could be Google Play, could be the app stores where you get our app, all those places and above. We love to hear from you guys, and it helps new people continue to discover the programs as we're seeing so many new air holes joining us every week. We love to see it. Keep that flow coming. Leave those reviews on your platform of choice. And, of course, keep those questions coming as well. We do love to hear from you guys. And let's see who else we're going to be hearing from on the old TWIFO program today. First off, holding down his usual spot on the FTSE Russell hot seat, my old compatriot, my partner in futures options crime here, Mr. Sean Smith, the managing director of derivatives licensing over there at FTSE Russell. Sean, welcome back to TWIFO, if ever so briefly, sir.
Mark, it's great to be on the show, and I do apologize. I'm only going to be on the show for a couple of minutes here at the beginning. So it's good to be here. Very excited. We're going to have a great show.
We're going to have a great show with a great guest because, Sean, you specifically requested we bring this guy back. You said, you know what? I missed him the last time. I love him. I want to have him. I want to be on the show with him. So we brought back, holding down the CME Group hot seat, a frequent contributor now, return offender here, Mr. Dan GRAMZA, the president of GRAMZA Capital Management and DMG Advisors. Dan, welcome back to TWIFO, sir. It has been too long.
Well, thank you very much, Mark. I'm really excited about being with everyone today. And Sean, it's great to be on the show with you as well. I'm looking forward to our conversation today. A lot to talk about.
A lot to talk about indeed. And of course, Dan, the second we were off the air last time, Sean hit me up and said, I have to get back on the show. We have to get Dan back so I could be on the show with him. And of course, we book all this, and then what happens? He can only be on the show for a few minutes. Such is the way things are cooking over there in FTSE Russell land these days. So before we get to the movers and shakers and everything else, Sean, why don't you break it down? What's been lighting up your tape? What's going on in the world of FTSE Russell, and where are you heading off to in a few minutes, sir?
I'm headed to a derivatives event, but it's COVID compliant. It's not anything that we can kind of chat about other than there's some charity involved with it. So looking forward to that. So I'm sorry I have to hang up. There was an announcement today, and I'm sure folks saw it, but we've expanded a relationship in Asia with the Singapore Exchange. Partnership that has been in existence for quite some time. We have a fantastic partnership with SGX. We're going to continue to grow product. There's been quite a client demand for some Asian products, so we're going to collaborate and extend into the markets in equities, other listed equity derivatives, some sustainable product, and we're going to be expanding into the ETF market with SGX on the security side. So we're really excited about that. But to get to the meat of it is, let's talk about Russell. The Russell Index is here in the U.S., and the Russell 2000 and the Russell 1000, in particular, the large caps versus small caps performance has been, in August, has been pretty strong for both. And it looks like our Russell 2000 small cap index is catching up. So we're very excited to be seeing the performance. It's still got some leg room to go, but small caps seem to be making a charge here in August. So very excited to see that.
Yeah, it's certainly on the rampage. Taking a little bit of a break out there today, but it's a weird day out there. It's a weird end to a weird week yet again. We pretty much say that every week out here. Before Sean has to run, let's dive into a little bit of what's been cooking out here in small cap and indeed equity volatility land since the last time we chatted. Coming into showtime, the VIX cash was hovering right around 23, which puts it up about a point from where it was this time last week. Of course, yesterday's sell-off and today's kind of mixed action leading into a little bit of that firmness on the vol front. Our old friend VVIX, which is the vol of vol, also ticking up a little bit, up about 2 points to about 115.5 coming into showtime. And our old friend RVX, which is the VIX of the Russell 2000, a.k.a. small cap vol, is down a bit, down about almost a little over 2.5 points, about 2.6 points from last show to about a 28 3/4 or so, which means that spread is down to about 5 3/4, which is down almost 3 points from last show. So getting a lot tighter over the past few weeks, which is kind of interesting after just getting ridiculously wide out to 13, 14 plus points for a while there. Small caps were just rocking and rolling and going crazy. And now they're kind of moving a little bit closer to what's going on with the broad markets. And as Sean mentioned, kind of in rally ho mode of late. So that's squeezing a little bit of that vol out there. Let's go out to really quickly. By the way, you guys, as always, cmegroup.com/TWIFO is the place to go to generate the reports for yourself. Pull up the equities. You can pull up Russell 2000. You can join us right here as well. You'd see that coming into showtime. We're seeing a vol, kind of a mixed bag, near portion, that kind of 1 day to go gamma contract. It vols up about half a point, but everywhere else the vol's off about 1.5 to 2 points out here in the Russell 2000 landscape. The most active contract this week with about 30% of the paper was the SEP contract. So a little bit farther out. Usually it's in the weeklies, but this time farther out, about 30 days or so. And the big print, the 1045 puts, that's kind of in keeping with what we see out here in small caps a lot. It's a little bit farther out, and it's a little bit farther out of the money on the put side. Tends to be dominating the tape, and that's the 1045 puts doing about 1,500 contracts or so this week. So pretty active out here, and followed hot on their heels by the 11 half puts out here in October as well, doing about 1,500 as well. So both of those, maybe a bit of a roll. I'll have to dive in a little bit to see. That went up on Wednesday here, the 1045 puts. So they went up on Wednesday. The 10 half puts, 11 half puts, those went up, also on Wednesday. So perhaps a bit of a roll going on there to keep the party alive from September out to October. And let's look at the skew here really quickly as well. Kind of staying pretty much unched this week out here in September. The puts were 17.6% rich last week, 17.7% this week. And the calls are literally unched, 11.8% cheap last week and this week. Sean, anything else lighting up your tape out there, Russell 2000-wise, sir?
You know, I'm just so excited that Dan's on the show with us today. And Dan, I promise I'll get you back on the show and we can do a proper show together.
Well, I look forward to that, Sean. I understand you're a busy guy, and we'll get it again.
But yeah, thanks, Dan, and please enjoy the show today. It's going to be a fantastic show. But just wishing you well. Back to Russell, folks. RS1, the Russell 1000, the large cap index, the product traded CME Group. It's a really interesting futures contract. I think everybody should be taking another look because you can actually have an interesting trade there. So I'm going to leave you with that note, if that's okay, Mark. So have a great show today, and apologizing for having to step out.
Go forth and prosper, sir. Dan and I will hold down both hot seats again, as we did last time, Dan. This is kind of going to be old hat for you now, holding down both hot seats here. So you knock Sean out of the way there, squeeze in to the FTSE Russell hot seat, see if you can sit on both at the same time. Maybe a little bit uncomfortable, but we'll do what we have to do. Anything catching your eye out here in the equity volatility or just in general equity landscape, Dan, as we're kicking off TWIFO here this week before we get into our movers and shakers, sir?
Well, I have to tell you, I think the stock market is somewhat doing what it should do. If you look at the large cap and the small cap, what I find interesting, and I think it's something we want to pay attention to, when it comes to the Russell, the indices that we were just talking about, that Sean was mentioning, the Russell is interesting because of how what it's composed of, these small to mid-cap stocks. And in times of economic expansion, it's much easier for these companies to respond to a change than these large cap companies. So the Russell is really a great index to watch for expansion. And in times of economic expansion, the Russell has a tendency to lead the way. So I think that's really kind of behaving the way it should. Well, as we saw over the last couple of weeks, it slowed down here recently. It's bouncy today. I do look for follow through to the upside. So I'm bullish on the Russell. And if you look at the other indices, the NASDAQ or the S&P, for example, they're also behaving the way they should. We have a very unique situation. And the unique situation is that we have a stock market that's going up when it feels like so many things are soft out there. Why is the stock market going up when Main Street is so soft? And I think there's a couple reasons behind it. If you want to talk about that now, or it's what I see happening there is this. If you look at the composition of the S&P, let's take the S&P instead of the NASDAQ first. The S&P is a capitalization-weighted index, which means it takes the value of the stock times the number of shares outstanding, which means very large companies have a big influence. So if you look at the top 5 tech stocks, you look at Microsoft and Apple and Google or Alphabet, those companies comprise almost 25% of the S&P 500 index. So they're a huge portion of it by nature of the composition of the index. But, the American Airlines and United Airlines and all those kind of companies and the smaller companies really aren't a part of this action that we're seeing here. Let's also think about what's going on with us in general. People are working from home. People are using technology probably more in some ways than they would have if they would have been in their office. We're seeing a demand for technology on the home base, which adds a unique impetus, I think, to some of these tech stocks. And we're also seeing it reflected in the NASDAQ market. We're seeing that strength there. That's kind of almost leading the way. We're seeing new highs today in that market. But again, if we go back to these big, large companies, it makes sense. And then when we hear about unemployment, if we think about the broader picture, the stock market first looks forward. It's not really looking back. A lot of data we have reflect history, not the future. Stock markets look towards the future. And so far, it seems it's positive looking into the future. But we have an accommodative central bank. We have low interest rates, which also has an impact on these stock indexes. Where are you going to put your money? Are people going to put the money in interest rate bearing instruments, or are they going to maybe looking towards the stock market for the higher return? We also see consumer spending. Consumer activity still is holding its own. That's a big deal. consumer spending in our country is 70% of the GDP. So we're seeing some ingredients that could still fuel this economy. It doesn't mean, though, that corner store and the smaller companies, unfortunately, may not be coming back. I hope that's not the case, but they're not reflected in the things that we're talking about. So the government assisted, we have central banks taking care of the broader economy, and I think the Fed's doing a terrific job. We have government programs that take care of the other half, and that is, how do people pay their bills? And that's where the government subsidies, the PPP, becomes really important. And hopefully we'll get that squared away here shortly. So I think we have the right ingredients for us to hold our own. When people talk about, my God, the U.S. is in a recession. Well, we should be. We should have high unemployment. We closed down our economy. So that shouldn't be a shock. And if we have two quarters of negative GDP, which puts us in that recession definition, like we see with Germany and other countries, again, I think that's logical. We should be in that definition. It doesn't mean, the dark clouds don't part sometimes, but right now, it all makes sense, I think. So what we're seeing, I think, is logical. I think the movement that we're seeing in the stock market's logical. And I got to tell you, I look for follow-through. I'm not bearish on this marketplace yet. I just don't think we have the fundamental things to cause it to, right now anyways, tip over. The big variable, though, is the virus. And that's a pit that we just don't see the bottom of. Although we're getting closer and closer to a vaccine, but that's going to be next year sometimes before they distribute it and people get it. So for us to be in this unusual state for the rest of this year into 2021 is kind of what I'm looking for.
So you're not done with this market yet. Interesting. You're still looking for a little bit of upside, which is fascinating. A lot of people have been writing into us of late, getting understandably concerned at these relatively lofty valuation levels. And it sounds like you're still looking for a little bit more upside, which is kind of interesting. Speaking of looking for things, folks are probably looking for our movers and shakers. Now that we got that Sean guy out of the way, Dan, we can kick off the show proper here with the way we always do it, listeners, highlighting the big movers and shakers for the week on the future side of the fence. This is just straight up underlying movement, what's been moving and shaking out there on CME Group for the past week. So, Dan, I will give you the same choice I gave you last time. Where should we begin our journey this week? To the upside, a.k.a. the light side, or to the dark side, sir?
Let's go to the upside.
How did I know? How did I know you were going to go that way? That's why you and Sean are of similar minds on that front. All right, here we go to the upside. Number 5 is copper. It's another week where we're seeing pretty strong bias towards one direction on the chart, and it's mostly green. You can find 5 to the bottom, but you got to squeeze a little bit to find those. By the way, if we expand that top 5 all the way to number 11, that gets us to Bitcoin. Everyone's always asking us, where does Bitcoin fall? Where does Bitcoin fall on the chart? It falls at number 11, about 2.6% to the upside. So not good enough to make it into our top 5, but I throw it in there as an extra for all you crypto fans out there. Number 5 is copper, up 5.31%. Number 4, lean hogs, up 6.33%. Lean hogs was number 3 last week, up 5.23%. So it's been a good couple of weeks for lean hogs. Number 3, lumber, up almost 8.5%. It was our number 1 upside mover last week at 10.75%. So a good couple of weeks for lumber as well. Eurodollar's up 9%. It was number 1 to the dark side last week, off 16.25%. And number 1 with a bullet this week is nat gas, off up 9.55%. It was number 2 to the upside last week, up about 5.7%. Now let's swing to the dark side here. Number 5 to the dark side, the Nikkei yen, off about 1.2%. Feeder cattle off a little bit more than that, 1.21% for number 4. Number 3, S&P Midcap 400 E-mini, off about 1 2/3%. One of the only other equity indices that can really hold a candle from a movement perspective to the small caps over there. Number 2, silver. It's been a big talking point for us on the show of late, off 2.09% this week, so giving back some of that lofty upside this week. It was also number 2 to the dark side last week, off about 5.5%. So silver giving back some of those gains of late. And number one to the dark side, also on the metals front, platinum off 5, nearly 6%, about 5.84% off there. So a lot of metals giving back what they've been getting over the past couple of weeks. All right, Dan, that's a lot of things to parse and sink our teeth into. Where should we begin our voyage this week, sir?
Well, I got to tell you, Mark, I like where you started, and that is with copper. It's a market that I think people have a tendency to overlook. It's one that I've been bullish on for a while. I think there is some opportunity here, but here's what puzzles me about that market. If we look at copper supply and demand, now this is a market that is sensitive to that. China consumes 48% of copper globally. United States is number 2. Germany's number 3 in terms of consumption. And we are seeing some signs that China manufacturing is increasing. They are getting stronger, which means there's a higher demand for copper there. And copper is a unique element because we don't have a substitute for it. It's one that we use, like in the United States, we use about 400 to 600 pounds of copper in a new home. We use 44 pounds to 90 pounds of copper in a new car, depending on the model. The battery-powered cars use about 4 times that amount. So we're seeing huge demand for copper, but we have a lot of supply. And maybe that's kind of tipping a bit. I do look for further movement. The big deal about copper is that we closed yesterday above $3. That's a psychological number for that marketplace. Down a little bit today. I do look for follow through. What concerns me, though, is the demand going to be consistent. So we have not so much a supply issue as much as a spurt in demand that's now fueling that kind of move. So I find copper an interesting marketplace.
Copper has been an interesting one. For a long time, it's been viewed as this China proxy, effectively. What goes in China is what happens and what drives copper. Let's see what's driving it this week. Let's see, coming into today's show, so the This Weekend Report, remember, that's just from Monday till now, listeners. Not from our last show. It's up about 4.5%, threatening the $3 price level, 2.9895 coming into Showtime up there right now. So it's up a wee bit, or about nearly 5%, about 4.5% here on the week. Now, copper, it's growing in terms of an option story. It's no Eurodollars or E-mini by any stretch, but it's still up a decent amount. It looks like it's up about 20% in volume so far here this week, or pretty close to it. There's about 3,000 contracts on the tape, and we're north of 3,500 right now. So a decent little run out here this week. The big prints, let's see, the big month with about 31% of the paper out here was November. And it was the 3.4 calls leading the dance out here with a whopping 363 listeners out here. But still, that's decent paper. You're talking a substantial portion of this week's volume on those 340 calls. So it's all relative at the end of the day, listeners. Look out here. The vol on that Nov contract is 26.5, up about 3 points. So getting juicy from a vol perspective out here in copper land. Skew, the puts were 2.4% rich to the at-the-money this week, nearly 4% rich. So the puts getting bid up. The calls 1.1% rich last week. This week, a little over 0.5%, about 0.6% cheap. So the calls coming in, puts getting bid. That's kind of interesting as we're seeing this a little bit of a protracted rally here in copper over the past week. Also reflecting, obviously, the option flow out here with these 340 calls. I'm going to go out on a limb and say someone was probably hammering those to make that skew come in a little bit. Let's just see really quickly. Also saw 3/4 calls trading out here in October. Those traded about 300 times as well. And also about the 3/2 calls, a nice round strike in December, trading a little over 300 times as well. So those are some of the interesting strikes. All upside call strikes this week, Dan, in copper. Anything out there catching your eye from a copper perspective this week, sir, in terms of what we just looked at, the vol, the skew, and all that good stuff?
Well, I think what you just outlined with what we're seeing, where are those strikes that we're seeing interest? Are they calls, are they puts? I think there's something to be said about that forward thinking when it comes to a marketplace. And that's one of the beautiful things about the options, the way you laid that out for us. What is the market thinking down the road, as well as right now? Where do we see support? And I think it says that we still have a bullish bias to this market, but yet there's some apprehension with it. I feel that way because I don't know if there's enough demand to sustain this. And I think that's reflected in those puts that you were just talking about. So it's a market that I think the bias is to the upside. I think the market believes that as well by the strikes that you were just talking about. But there's also that element of we need to be careful at these levels. And I think that's the mix that we're seeing for that market.
Since we're talking about metals, let's stay here for a second as well and move on out to another name that was lighting up our movers and shakers this week. Number 2 to the dark side, that was silver, a name we've been talking about a lot of late. Coming into the show now, silver's at about a 27, almost 40, 27.39 out there. Puts it up about 5% so far on the week. So getting back some of what it gave back over the course of just this week now, just the this weekend portion. We're seeing silver on the rise. So obviously that sell-off occurring towards the latter portion of last week. Let's see, up about 5% or about 1.3 handles. So that front future is threatening that 27.5 level out there right now. From a volume perspective, to give you a gauge of where silver falls in relation to copper. Silver about 47,000 contracts on the tape this week. So a little bit more active contract than copper. And of that, the most active contract of that bunch was in December, with a little bit over a quarter of the paper, almost 27% of the paper going up out there in December. So that's where we'll hang our hat here this week. The vol in December is actually coming off pretty aggressively. The D's vol is at about a 48 3/4. That's over 8 handles lower than what it was last week. So vol getting annihilated out here in the D's contract. Let's go out to the skew. The puts, let's see. The puts were 1.5% cheap last week to the at the money. This week they are 7.5% cheap. So puts getting cheaper. Calls 5.1% rich. This week 9.3% rich to the at the money. So calls getting bid up. Puts getting cheaper as the vol is getting annihilated out here. That's an interesting combo. Let's go out here and see what the number one print was out here, and it was also in the D's contract. That's fortunate for us from an analysis perspective. And it was the 34 even calls, 34 handle, listeners. That's not the strike I would have expected out here. Pretty active throughout the week, a total of about 3,200, which is pretty big for a contract that does about 46,000 total. 34 calls, doing about 1,200 and change on Monday, 1,300 and change on Tuesday. Most of that opening on both days. So someone opening for size on this 34 strike out here. Let's see. Given the fact that the calls were bid up quite a bit, I'm going to guess that perhaps they were buying those, but the vol did come in pretty aggressively here as well. So someone was harvesting a wee bit of vol out here as well this week. What was the other active contract? Well, now we drop off a little bit beyond that. That was the most active contract out here. Then we go out back to October out here, where we get the 35 even calls, so a little bit farther out of the money strike, which is kind of interesting. Those did about 1,500 contracts. Let's see how these went up this week. These went up pretty much lion's share, about a third of them. Actually, no, I take that back. The lion's share was today, almost 900 today, and about 450 on Monday. The rest scattered throughout the week. A decent chunk of that opening. Obviously, we don't know about today's paper out here. So some opening paper here as well on the 35 strike. So a lot of upside at play this week here, Dan, in silver. Does that surprise you? You think maybe people are repositioning for another move? You know, we saw silver run, then retreat a little bit, and now it looks like it's getting a little bit of a win behind it again. Does that surprise you what we're seeing from an options and vol perspective out here this week, Dan?
Yes. I mean, I agree with you. That 34 strike, 30 strike, I would think that would be kind of leading the pack. That really does surprise me. And it does say something about the attitude of the market. It's that barometer that we can look at. And obviously, it seems that people are very bullish on this market. From my point of view, that really does surprise me. But I think that 30 is really where you want to pay some attention to. Two things about that level. One, if we're going to find these buyers that the market is anticipating, then I think we want to see it relatively soon. We see a little bit of buying coming in today. If it's going to follow through with that, I would look at it from this point of view that within the next 4 to 5 trading sessions that we want to be closing above 30. If we don't, I'm looking for a sideways move to continue. I'm not necessarily bearish on this, but I think we have to be very cautious on this market in that regard. So if buyers are here, we want to see their footprints. The other thing that wouldn't surprise me here, if you look at the first time we hit 30, we backed off. We didn't close through 30. We kissed 30 and we found sellers. So theoretically, it's that old saying, first time up is a fade, second time to go with. That if we go back up towards 30, let's say in these next 5 trading sessions, then we want to close through it. We want to be 30-10, 30-20. We want to see some movement, some commitment behind it. The people that were selling it before now have to make a decision. They would be underwater, so we expect them to get out of those short positions and now buy this back. So we'd expect those calls to really get bid up, the puts to really drop, and we'd want to see price action closing above that 30. So I think the next week or so could be very interesting for that market.
Listeners, before you ask why we didn't do platinum, which is number 1 to the dark side this week, off 5.84%, because it's done 57 contracts so far this week. So not a lot of options or really volatility or skew to parse from an overall platinum perspective. But that leaves open the question, Dan, where should we take our journey next? Which complex and which product is drawing your eye this week, sir?
Well, I think if we want to look at the we can look at currencies. How about taking a look at the currency market?
You want to do Euro, USD, pound? What's floating your boat today, sir?
Right. Well, let's start with the Euro.
I think we can make that happen. Listeners, of course, if you're playing the home game and use that drop down, go down to foreign exchange, then the FX majors, click on the Euro, USD, and you can follow along with us. Remember, to play along with us, you want to set the dates to our show date here so you can see exactly what we're seeing. Of course, you can run these reports at any time. We don't judge. If you want to check your Euro USD at 2 in the morning, have at it. The reports will be updated and live and good to go. We're just talking about the snapshot of what we're seeing right now out here. And coming into showtime, we're seeing that Euro USD up ever so slightly on the week, looks like a little bit more than a 0.1% out here. It's at about a 1.186 out there for all of you who aren't FX heads out here. In terms of where the action was, let's look at the overall paper first to kind of get a sense of where the Euro USD falls in relation to what we were just talking about, silver and copper. Remember, copper was around 3,500 contracts, silver about 47,000. So far on the week, we've seen about 54, almost 55,000 in the Euro USD. So silver getting more active out there. You know, Euro USD is always traditionally seen as one of the more active FX contracts out there, and silver can hang with it now, which is kind of interesting. Euro USD, kind of a quieter week. Let's see where that paper was aggregated. It was out here in September, listeners, with about 28% of the paper. So let's go out here, see how our vol is holding up. That contract has a little bit more than 2 weeks to go. So it's right outside of our benchmark for measuring skew and all that fun stuff. And the vol out there, pretty light. It's about a 7.88, up about a quarter of a point this week. Another reason why FX doesn't always make it onto the rotation. The vol usually isn't there to merit a lot of fascination for the retail folks out there. In terms of skew, the puts were 2.1% cheap last week. This week, about 3.2%. So puts getting a little bit cheaper. Calls almost 5% rich. Today at the money, 4.9% rich. This week, 5.5%. So calls getting bid up. Puts getting a little bit cheaper as the vol is up slightly, mostly unched from an overall vol perspective. And what was the big print out here this week? Well, I said we're at about a 1.186 on the at-the-money strike. It's the 1.18 and a quarter put out here, doing nearly 1,600 contracts, 1,580 to be precise. Let's see. These went up, pretty much all of this went up today, 1,482. So all but about 100 went up today. So we have no idea what the OI is going to do because that's all went up today. But that's obviously a lot of action on that put strike here this week. We also saw some interest in the 120, the 1.2 calls, calls going out pretty much today. These are expiring today. These are pretty active. The lion's share of those, though, were on Tuesday with about almost 1,200 of that 1,350 or so going up on Tuesday. That was opening, interestingly enough. So opening paper, not closing with this contract, pretty much going out in about less than a day out here. That's kind of interesting. You don't usually see a lot of opening paper and a lot of other, let's say, the equity options on the weeklies are usually closing, getting that close to expiration. But in the futures options, people like to open even with a few days to go. It's one of the fascinating liquidity things I've noticed about the futures options volume over the years. Let's look really quickly and scroll on down, see if we see any other weird or aberrant prints before I toss it over to Mr. GRAMZA to regale us with all things Euro USD. Now, those are pretty much the two sizable prints. Dan, anything else catching your eye out here or lighting up your tape in Euro USD or indeed FX land this week, sir?
Well, I think if we stay with the euro, that 120 action so close to expiration, I think is interesting. Either people are very optimistic or they know something that maybe we don't know. What is interesting about what it's doing now, and I guess that 119 strike would be the one to maybe look at, is this. The way I look at the setup that we have right now is I think today we saw weakness, we saw follow through from yesterday's action, which was weaker. And that makes sense. That's not surprising to see that. We saw a weaker dollar a stronger dollar, and we see some weakness in the euro. What's interesting about it is that the action that we saw today, and here's how I look at this. When it comes to futures and options on futures, one of the things that you and I get to do is that we get to see how the market absorbs information around the clock. So when I go to bed, I live in the Chicago area. So when I go to bed, I look at what Asia's doing. And when I wake up, I see what Europe is bringing to me. So last night, we saw weakness in the euro as Asia now had a chance to respond what happened during the day session. So it did go down. What's really interesting is what we're seeing in the U.S. session. Right now, we're seeing buyers coming back into that market. Now, from my point of view, the way I would look at this is the next 5 days, again, for this one, I think is going to be very important. If you and I were a buyer, just as an example, if we are a buyer of that 19 strike, what I would want to do is I want to buy expiration beyond the current. Because if this works, I don't want theta to be an issue. And I'm looking at a daily chart. If this market does start to perform, tomorrow is when you want to see that. If it does start to move up, by the end of 5 days, we actually want to be closing near that 120 level, what we saw the action in before. The reason for that is from a technical point of view, it would imply the continuation of an uptrend. If we don't get to that, and I didn't get the follow through, I would exit the position. I'm looking for certain price action. That's how I try to set up my option trades. I look at price action to help me set it up, and then I look at behavior that needs to occur within a certain amount of time. And I'm willing to pay for that. I'm willing to pay for delta near 100. I'm willing to pay for option expiration beyond the current. But it's got to perform within a certain amount of time. If it doesn't, I give it the big adios and I look for another trade setup. So I think the setup that we're seeing here in the euro is interesting. It's going to be important to see that we get follow through over the next few days here. And if we do, then I think we have a chance for continuation of an uptrend in that market.
A lot of continuations of trends, including the continuation of this show to ponder here. Dan, we have a lot of other complexes. We've already touched on metals. We've touched on FX. We've touched on equities. Where should we bring our party next? We got some movers and shakers to consider. Should we go outside of our movers and shakers? You're our guest, but I'll put you in the driver's seat this week, Dan. What are you feeling for our next product category here, sir?
Well, I have to tell you, I like the idea of the movers and shakers. Or how about the interest rate complex?
I think we could do that, sir. Is there anywhere particular on the curve you want to land first?
Well, how how about if we go towards not the middle necessarily, but let's take a look at the 10-year notes.
It's like we're on the same brainwave here. I pulled up 10-year as you were speaking here, Dan. So
hey.
See, we're simpatico here on the show. Of course, listeners, you can find those going out into the rates complex. Hit the 10-year. I like to hit select all. You guys, it's up to you. Could be a little bit of an overwhelming amount of information for you out there, but I like to see the full gamut of what's transpired over the course of the past week. Now we're getting up here. Rates obviously do a little bit more paper out here compared to the 3,000 of copper, the roughly 47,000 of silver, the 55 or so thousand that we were just talking about in the Euro USD. Now we're talking 1.2 million on the tape out here. So the 10-year, a wee bit more active out here, listeners. And let's see, of that, 44%. So almost a good chunk, shall we say, to use a technical term, coming up here in this contract that is going out, the SEP contract that is going out in a day, 1.08 days away, 44% of the paper going up out there this week. So that's where we're going to hang our hat. We have to, even though it's hard to really parse vol or skew or anything in a name that's going away in a day. By the way, if you're wondering what that vol is, it's 3 3/4 for that contract, up a half a point. We always joke about the vol being anemic out here in these, and that's pretty much the rest of them are at or below $3, it seems like. So, yeah, not a lot of juice in the 10-year, but hey, go figure. It's 10 years out, and we've seen some pressure on the rates complex over the past year or so, so not a lot of vol overall to be found in a lot of these, but 44% of the paper coming in this front contract, so we kind of have to, even though it's laughable to talk about skew and vol with a day to go. We're going to try it anyway because it's so much of the paper went up out here. 1% were the puts last week. They were 1% rich to the at the money. This week, they're about 5% as they're going away here. So puts getting a little bit more love. The calls, 9.3% cheap this week, 4.2%. So calls getting bid up, puts getting bid up as well. So a little bit of juice coming to both of the wings as we're seeing the vol, I guess you can say, firm up at a juicy 3 3/4 out here. What were the big prints out here? And I say big, I mean it out here. 83,000 is what was lighting up the tape for our number one spot. It was the 139 put in that SEP contract with 1 day to go, doing 83,000 contracts this week, listeners. The lion's share on Tuesday, 25,000. Actually, I take that back. Wednesday, 29,400 on Wednesday, 25,300 on Tuesday, about 20,000 today, and almost 9,000 on Monday. Almost all of that closing, listeners. So a good chunk of closing paper on these 139 puts. Makes sense. Close to at the money put strike right there. And seeing a lot of that paper coming off as this contract is going the way of the dodo in about a day. Followed hot on its heels. Let's see. Actually, we have to go out a little bit now for the next most active contract. It was the 140 calls out here in October. 140 calls doing almost 71,000 contracts. So again, more than silver and copper combined in this one contract. The 140 calls, 70,500 or so. Looks like the big day was Monday. 33,000 and change going up on Monday. We got about 14,000 on Wednesday, 11,600 on Tuesday, and about almost 11,000 so far today. And unlike our previous victim there, this one mostly opening. So the 140 calls mostly opening out here, which is kind of interesting, maybe a little bit unexpected. Opening paper in October, closing paper with 1 day to go. That makes a little bit more sense. Interesting stuff. Let's go a little bit farther out. Let's just go out to this. The month that had the second most paper was this October contract. Let's look at the skew here really quickly because that's a little bit more of a sane measure. The vol out here, 3.16, actually off about 0.15 or so this week. The skew, the puts were 6.9% rich to the at the money this week, 7.9. So puts getting bid up in October. The calls, 4.5% cheap last week. This week, 6.6% cheap. So puts getting bid up, calls coming in a little bit. That makes a little bit more sense given what we're seeing out here. Dan, any of this paper surprising you, and what else is catching your eye out here in the 10-year this week, sir?
Well, I have to tell you, what you just said kind of fits with my bias. So I don't know if I'm a good judge there, but a few things. First, I have to tell you, I was off on my outlook for today's action. I was looking for 139 today, actually. I was looking for a down day in this market. A part of that reasoning was I was looking for an up day in the stock market. You know, one of the things that futures allows us to do is to watch how capital flows in between these different sectors. So, for example, when we see the stock market getting higher, that money's coming from someplace. And oftentimes, one of the places it comes is people take money out of what they consider a safe haven investment, interest rates, and that capital flows towards the stock market. So, typically, with the stock market doing what it is right now, we would look for weakness in the 10-year notes. The whole yield curve, we'd look for it to soften a bit. And we're seeing it only slightly. So the action I was looking for first is not happening. I think that 140 strike is revealing, especially when you go further out. What is that October telling us? Is it telling us something about the election? Is it telling us something about people are buying puts out there because they think if we get towards that level that we could easily back off? What does that say about our stock market? That would imply strength in our stock market as we go further out. I think that's what the interest rates are telling us right now when we look at those options. So I find that interesting. I am not bullish on this market. I do look for weakness. For tomorrow's action, I'm looking for an inside type day. And by the end of this week, I'm still looking for or I should say by the middle of next week. We're almost at the end of this week, but I'm looking for that 139. I do look for weakness here because I'm looking for strength in the stock market. So I think it's an interesting barometer that we can think about. And again, we have this election coming up. It will be interesting to see how the market's positioning itself when we get closer to that.
It'll also be very interesting to see what you guys have in store because it's that time. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. It is time for you guys to take the reins, your questions, your comments. Speaking of questions, Dan, when you were on last time, you requested that we hold one for you for your return appearance. Luckily, we got this listener, Belzer. We answered this question as well on another episode of another show, so he didn't have to wait too long. But I wanted to give you your chance to discuss this one because this one clearly resonated with you. Belzer wanted to know. He says, hi, I've been trading/playing options for a while now, and I have a basic understanding of the Greeks. Here's my approach. When I buy a call option, I think to myself, do I believe that this stock can reach the break-even price before the expiration date? If my level of confidence is high, I tend to purchase it. Theta doesn't even matter in this case. I just care about whether it'll reach the strike and I'll make a profit. Is that the right way to approach the trade, or should I be factoring in theta into those positions to improve my returns? What role should delta play in my analysis? And if I think a stock can make a particular strike by expiration, and then am I better off picking a few higher probability but more expensive calls or more lower delta calls to maximize my gains? I'm getting a lot of these questions of late, Dan. People asking, whether the Greeks really matter or should I just look at the strike, I like it, look at the price, I want to take it, I want to buy it, I want to sell it, and that's kind of really all I need to do, some people are wondering. So what do you have to say here for our listener, Belzer, Dan?
Well, I think it's a terrific question, and there are excellent points that he's raising. I guess I look at it from this point of view. First, I think the Greeks are important. They give us those measures of what's happening, what the expectations are of the market, how this particular strike or this particular option is performing at that point in time. But when I think about the strategy that he's using, I guess I start at the very beginning, and it's this. And again, my determination of what I do what strike I'm going to pick or how I'm going to trade a particular market is really based finally on what price is doing. So I said a few minutes ago that I'm bearish on the 10-year notes. But the fact is, if 10-year notes are going higher from a price point of view, I want to be on the long side. So my opinion is just that. What I want to really look at is what is price doing. Now, based upon that idea, I look at the markets, and for option trades as well as for futures trades, from the point of view of price action. So I would start with a technical approach. I'd use a technical guidelines. For me, I use candle charts, for example. That's a tool I've been looking at since the mid-'80s that I learned in Tokyo, but not in the typical fashion. But let's put that aside. No matter what your technical approach is, let's say then that you have a bullish buy signal. When someone trades on a hunch, it is just that. I want company. I want some justification for initiating my action. But as we were talking about before, I have some requirements that now come around it. What's always bothered me is when someone says, well, that option only cost me $500, and who knows, maybe it'll work. What the person, I believe, is saying to me, I have bought an option, it's not performing, I'm in a hope trade, and I'm just going to give it a shot. Well, what also goes through my mind is that person is saying to me, I'm going to donate $500 to the market. So let's start with the idea that you've used some technical approach that says price is indicating this market could be going higher. And you have, let's use, for example, a buy signal. So now you have this buy signal for whatever approach you're using, and it says that you're looking for this market to go up. I'm talking about a daily chart now, and in this case, for most technical approaches, I believe that when you get a buy or sell signal, action will probably start within the next 2 to 5 days, trading days. If it doesn't, the probability is it won't. Now, using this logic, I've gotten out of good trades. I want you to know that. But that's happened far fewer times than getting out of trades that weren't performing. All right, so we have this buy signal. Belzer, here's the way I would look at it. And to keep it simple, I would want a few conditions. One, I want delta near 100. Let's use that Greek to start with. I want delta near 100. And the reason is, if I have conviction that I think this market's going up, I want to get paid for the trade. How many times do you hear somebody saying, I bought these calls and they hardly moved at all and the market went up? Well, they bought, an option with the delta of 10 or 5 because it was cheap. And so do they expect the same performance if it goes up $1? No, it should go up about 10 cents. So it's doing what it should do. It's just not doing what the user wants to do unless they bought 10 of them, right, to get that delta near 100. So the option is such a beautiful instrument. It will do what we allow it to do. And if you want to have it move $1 for $1 with a delta of 10, buy 10 of them. Anyways, I want delta near 100. I'd buy 2 at the monies or a deep in the money strike. The next aspect of that, so I'm paying for that. To do that. The next aspect is I want the expiration beyond the current expiration. And it goes back to another Greek. I don't want theta or time decay to start participating in this trade. So if I'm doing it near expiration, theta is, if I'm doing it within 3 weeks of expiration, theta is participating. Well, I want the idea that if this trade works, I want to give it some room to allow it to work. So therefore, I need time, and I'm willing to pay for that time. So I'm buying expiration beyond the current. You got to pay for that. You got to pay for delta near 100 or a deep in the money call, we said calls. The other condition that I find important is time. Now go back. Take a look, Belzer, at a trade where if you use a technical approach, Look at that when you had a buy signal, since we're talking about calls. When did it perform? How long did it take before that market started to perform? And if it happened within 5 days, well, that's a parameter that you might want to consider using. For me, it is a parameter. So now you and I, by delta near 100, we take theta out of the question by buying time, expiration beyond the current, and it needs to perform within the next 5 trading sessions. If it doesn't, well, from my point of view, I'd give it the big adios, take that money, because there's still going to be some money left. I'm not donating all that premium, chances are. So I'm going to take that premium and look for another setup. The trade I'm looking for is one that performs. And technical tools are one of the things that helps me make that decision. And that also determines what strike we're going to take, right? So I can take at the monies, I can take it deep in the money strike. So all those parameters that we think about that you brought up kind of come to play, I think, in this kind of approach. So it's a more of a methodical approach. Then we could add spreads in here. We could add other concepts if we want to, buy or sell some puts to help this position, depending on our outlook. But for me, I like keeping it simple, and I'm looking for performance, and I need to see it within that certain time frame. So I think those are some things you might want to consider.
Well said, Sir Belzer. Hope you appreciated that. That was a very in-depth answer to your question here. Let's see how many more we could squeeze on. We got some live chats here. My boy Luigi, that name sounds familiar in the chat. He says, "Hey, Mark. Oh, this is Joe. This is Joe from the Joe and Linda duo. Just wanted to say happy early birthday. Enjoy your day." Wow. Thank you very much. You even remembered my birthday. I forgot it was coming up, but yes, it is coming up right now. Thanks for the reminder. I'm just kidding. I appreciate those well wishes out there. Thank you for that. Yes, I will have a fun time on my birthday. Got to figure out something to do that's fun in this pandemic shutdown environment. Hopefully we'll figure something out. Thanks for that there, Joe. All right, next up we've got Big Tim. Big Tim wants to know, this is another one's right up your alley here, Dan. Good thing you're on the show this week. You've probably gotten this question, conservatively 8 million times over the years. In your role as a futures educator, Big Tim wants to know, why don't futures symbols make sense? Why don't they start with an A instead of an F? Why is November X instead of Y? About the only thing that makes sense is Z for December. Yeah, I'm with you, Big Tim. The future symbology always has been a bit of a rough road for people who are newcomers to this side of the fence. They're not used to having to deal with these codes on top of what they're looking for out there. So it's always a bit of an extra wrinkle. Dan, what do you have to say here for Big Tim, who wants to know, why don't future symbols make sense, Dan?
Well, I totally agree with Tim first, because they don't. One of the issues we have, if we use the first letter of the month, we have January, June, July. So that becomes a bit of a challenge. So J, which month is it? So that became, I think, part of the incentive to come up with a different lettering system. But why to begin with F? If you're going to start at the beginning of the year, why not go A, B, C, down the line? I don't know the answer, by the way. F for January. But here's the thing you want to think about. Excuse me. Most of your quote systems, too, you put in a couple, either put the name in that you put, like crude oil or whatever it is you're trying to look at. It'll pull up that symbol. If you look at the quote page, depending on how that's structured, that'll give you an idea of some of the expiration months that you can look at and the symbols associated with that. But Tim, I'm right there with you. When we look at second year out expirations, that begins with an A, by the way, for January. But right now, there is no simple answer for that one. I have to tell you, I have asked that question so many times in the 30-some years I've looked at futures, and no one has an answer for it. But it is what it is, and is what we live with in this marketplace.
Yes, it's one of those ongoing mysteries of futures. And you're right, Dan, a lot of the brokers have done a good job of trying to obscure that pretty much impenetrable nonsense that is the future symbology. A few places still make it front and center, like if you go into the quick track reports for the show like we're doing it here, you're still going to see the traditional symbols out there. There's no, shall we say, translation for those of you who are newer to the space. So you do need to know your symbols if you're going to be playing around with those reports. And a few other analytics platforms out there do something similar. But a lot of the brokers have tried to get rid of this because they understand it doesn't really make a lot of sense. Why is January F? Who knows? It's stupid. I agree with you. D as Z makes some sense. So I guess maybe you pick one starting point. If you want to start with Z, then you work back from Z maybe. At least that could make some sense. We don't even have that. So yeah, it's a lot of nonsense out there, Big Tim. We're with you. We feel your pain. All right. Unfortunately, that music means we've come to the end of another epic journey through the world of all things futures options. Got more questions to get to here. We'll get to more of them on your next show about correlation. All sorts of fun stuff to unpack there. The show, implied vol, all sorts of good stuff. Keep those questions coming. You know where to find us. And, of course, if you like what you hear, keep those reviews coming as well. We do love to welcome more new listeners to the show every week, and we love to see that trend. We want to keep it continuing, so keep those reviews coming as well. And, Dan, if folks are intrigued, maybe they liked your answers you gave to Belzer or about the futures options symbology, and they maybe want to know more, where should they go? What should they do, sir?
Well, I provide a free daily video at dangramza.com. If you haven't looked at futures, or if you're curious about how these different markets fit together, I look at 22 different markets. It's a free daily video, and it gives you an idea of what I'm looking for, and you'll see some red and green lines, which represent, for me, these are not trade recommendations, buy and sell levels. I call them bullish and bearish levels, but it's a way to get a feel for other markets. If you only look at the stock indices, now you may want to look at currencies and interest rates and metals and energy and agricultural markets. Those are the other complexes that I look at. So it may be something to check out if you're interested in looking at futures themselves. And then from that, you and I could always wrap option strategies around that. But that's one source I think we could take a look at if you want to continue that conversation.
There you go, dangramza.com. Check him out. You can find his videos and a lot of other fun stuff there to kick the tires and light the fires in between his episodes. So now we have to get you back again, Sean. Or I should say, Dan, because Sean missed you yet again. So we're going to have to do it for a third time. I think you're arranging this, Dan. I think you're doing this just so you can keep arranging appearances on the program here.
Yeah, nothing planned, but it will be great to be with Sean and you the next time around. Thank you so much for today. I hope the listeners have gotten some insights. You do a great job, Mark, of laying things out. And happy birthday.
Yes, thank you very much. Our listeners remembered my birthday. That just brings a smile to my face. Of course, if you want to check out more information in between shows, you know where to go. FTSERussell.com is the place to go for all that stuff about the coronavirus and its impact on the equity markets, as well as some interesting stuff going on with their Asian offerings. Going to add more wrinkles to the FTSE Russell derivatives arsenal soon. That should be interesting. Stay tuned for that. FTSERussell.com, the place to go. Give them a follow on the old Twitters as well, at FTSE Russell. And, of course, you know where to go for all of this mainlining info, cmegroup.com/TWIFO or /TWIO. That's the place to go. Check out these reports. Those are running all the time, so you can check them outside of just when this show is live. So if you want to check your copper at noon Central, we won't hold it against you. Whatever you want to do, head on over there, cmegroup.com/TWIFO/TWIO. That's the place to begin your journey over there. And on behalf of Dan and Sean, who had to duck out early, and our friends over there at CME, and myself, I thank all of you out there for downloading and streaming and subscribing and sending in your questions and remembering my birthday. Thanks for all of that. And we'll see you back here tomorrow, 1 p.m. Central, 2 p.m. Eastern for Volatility Views. And then we're back again on Monday with the option block. It all kicks off there all the way to Thursday for more of This Week in Futures Options.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.